All right, let's jump right into the US financial picture. We're going to break down what's happening with the markets, they're near all-time highs, what the Fed is thinking, and what signals we should all be watching to see where things are headed.
Okay, so the big headline, US stock markets are just incredibly strong right now. We're talking about them hovering right near all-time highs. You look at the S&P 500, the Nasdaq, the Dow, they're all right up there performing really, really well. And what's interesting is, even with the usual ups and downs, that little bit of volatility we've seen lately, investor confidence is staying strong. There's this underlying feeling of strength that's really driving things.
So you gotta ask, right? What's fueling all this optimism? Well, it really boils down to two main drivers that are pushing everything up. First off, let's talk earnings. They've been solid. We've seen some really impressive numbers from big names. Think Dollar General, Hormel Foods, even Salesforce. And when you see companies that are so different from each other doing well, it just sends this wave of confidence through the whole market.
Okay, the second big factor, and you could argue this one is even more powerful, it's all about the Fed. The real story here is that almost everyone is expecting a big change in policy, and soon.
And that big change? It's an interest rate cut. Right now, the consensus view for most economists is that we're going to see a 25 basis point cut. That's 0.25% come December. And I mean, this really shows you just how widespread this belief is. This isn't just a few people hoping for a cut, it's the dominant view. And honestly, just the idea of lower interest rates is huge for stocks. Why? Because it makes money cheaper to borrow, which can get both people and businesses spending again. So everything sounds pretty good, doesn't it? But is the whole story really that simple? Is everything quite so rosy?
Well, that's where it gets complicated. Because when you start to peel back the layers, looking past those big market numbers, you find what some analysts are calling a pretty major divide.
They've given it a name, the K-shaped economy. And the idea is pretty straightforward. Instead of an economy where a rising tide lifts all boats, we're seeing two completely different stories play out. Imagine the letter K. One line goes up and the other goes down. That's what they're saying is happening. And you can see it pretty clearly. On that upward arm of the K, you've got high-income folks, big corporations, and, of course, the AI and tech sectors, which are just booming. But on the downward arm, that's where you find lower-income households, small businesses, and industries like manufacturing that are really feeling the squeeze. And look, this isn't just some abstract idea. There is actual data backing up these concerns. Manufacturing activity, it's been shrinking. The economic reports we're getting are, well, they're mixed. And you even have some Fed officials saying, hey, let's be careful, inflation is still a thing. It all adds this layer of, what's really going on, that the stock market highs might be hiding. Okay, so we've got this split picture, right? The market is optimistic, but the underlying economy is divided. So what comes next? What are the key things we all need to be watching? All right, here's the playbook. Number one is the Fed decision. Do they actually cut? And what do they say about the future? Number two, inflation data, specifically the PCE, which is the one the Fed really cares about. After that, we're watching the labor market to see how strong the consumer is. And finally, we're all looking at those tech and AI earnings reports to see if that amazing momentum can keep going. And that last point, the earnings, that's really the million-dollar question, isn't it? The big unknown is whether this incredible boom we're seeing in tech and AI can actually spread out and help lift up the rest of the economy. So that leaves us right here with a huge question mark. You've got markets at record highs, but an economy that's clearly split. So which one wins out? Is it the market's optimism or the economy's underlying struggles that's going to write the next chapter for all of us?